What's up, everyone? It's Brand the Mortgage Man here, and I've helped more than 10,000 home buyers over my 22 plus year career in mortgages. And today I'm gonna help you. In this video, I'm gonna show you what the mortgage approval process looks like and what you should expect when going through it. So if you're ready to purchase a home or even considering purchasing a home, the first step that you need to take is getting pre-approved for a mortgage. So let's get right into it. So whenever you're gonna get pre-approved for a mortgage, the first thing you want to do is you want to find the right lender to work with. Now, you want to work with someone that you're going to be 100% comfortable with and confident with. So there's different ways to find that person. So you might get a referral from a friend, family member, a coworker. An easy way, if you don't have that, is to go online, go to a website like Zillow.com, where you can actually search based on the area in which you're planning to purchase a property, or maybe even the area in which you live, and you can search for mortgage lenders. What's nice about a site like Zillow, for example, is that it's unbiased. The information that you're gonna read about these lenders, specifically the reviews that were written about them by past clients and maybe even realtors that they worked with, those aren't controlled by the lender themselves. It's not like going onto the lender's own website where they can have fictitious, things written about them by, who knows, not even real clients, right? By going on Zillow, they're extremely strict about the reviews that are actually listed on their site, and they're vetted out. So you know they're legitimate and the information you're gonna read is accurate. So what's good about that is if you have someone who has a bunch of 5-star reviews and people are talking about how great they were and they got the rate they were expecting, the cost they were expecting, the customer service was fantastic, if there's enough of those on that site, it should pretty much tell you that you should expect to have the same level of service from that person that you find, right? So that's what I recommend if you can't get a referral from someone that's already worked with someone else. So go on Zillow, find your lender. So you've done that. Once you do that, you want to call that lender and you want to have a conversation. And the way I talk to my clients is how I'd expect any lender to talk to their clients, is to discuss what your goals are. So I always start a conversation with, hey, tell me about your goals with the home buying process, because I want you to explain what's important to you. Now, your goal could be that I'm looking to purchase a home in the next 90 days because I want to purchase in a specific city that has it's a great school zone, and I have 2 kids that are starting elementary school and I want to make sure they're in this good school zone. That's a goal. Or I want to be able to buy a home that has a monthly payment no more than $3,000 per month and I have $20,000 to work with. There's multiple things that could be a goal for you. Just make sure that the lender you're working with is targeting those goals, that they're not just giving you information to give you information. So your conversation should start with you providing what your goals are with the home buying process to the lender that you've selected. Once you've done that, you should talk about what's going to help you reach those goals, right? What are your qualifications for the mortgage? The things you're going to talk about, right? And this is important, so you definitely want to check this out. I'm going to write this down for you. Is for one, you're going to want to talk about your employment, right? So your employment. Typically, you're gonna need a 2-year employment history. Now, some of you may not have a job, but you have other income sources. Maybe you get like Social Security, or you get disability or pension, or you live off dividends and interest, right? There's multiple ways in which you can have income, but your source of income is what we're talking about when we talk about employment. So I'm gonna call that, you're gonna wanna know what your income source is. So to know what your income source is, or your income, is you're gonna wanna make sure you have that information readily available. There are times that I speak to a client and they're not quite sure how much money they make in a year, or what their start date was with their employer. So things you wanna know with employment, right? You're gonna want your start date. When did you actually start with your employer? And what lenders are gonna wanna look at is the 2-year history, right? So 2 years. So if you've been with your current employer less than 2 years, it doesn't mean you don't qualify for a mortgage. It just means that if you had a previous employer, that you need to know what your time frame was that you worked for that previous employer as well. Now, on top of the employment, lenders are gonna need to know your income. Your income is gonna be a huge factor in qualifying for a mortgage, because that's how we determine your debt to income ratio, how much money you make compared to how much money you spend each month. And when we talk about how much money you spend, it's gonna factor in the new property you're buying, along with any other debts that already appear on your credit report. And the balances aren't really a concern to us unless it's a student loan that's not reporting a payment. What lenders look at is the minimum monthly payments on those debts that are on your credit report, which leads me to your credit. So employment, your income, your credit. So your credit, you may just be thinking, oh yeah, my credit scores, right? Well, yeah, your credit scores are important because there are minimum credit score requirements depending on the type of mortgage you're looking to qualify for. But on top of the score, what's on your credit also plays a big part in qualifying for a mortgage. Do you have late payments? Do you have collections? Do you have charge-offs? Have you had a bankruptcy? Have you had a foreclosure? Right? These are all things that would show up on your credit report that need to be considered. So even if you have a qualifying credit score and you have items on your credit that may disqualify you for a mortgage, well, that's going to play a big part in your ability to actually obtain a mortgage. So you want to keep that in mind. It's not just about your scores, that's a part of it, but what's on your credit is just as important, and that's why it's important to allow your lender to actually pull your credit. Now, you do that typically at the end of the conversation, but just know going into this initial call with a lender, if you're serious and you're planning to buy something in the 120-day window following that call, you're going to want to let that lender pull your credit. I'm talking about a hard credit inquiry, not just a soft credit inquiry. We have your employment, your income, and your credit. And how are you going to cover the down payment and closing costs on the home? Well, you're going to do that with assets. So your assets, that's money that you have in your bank account, your retirement account, stocks, right? Crypto, right? There's different places you can have your assets. And in this case, we're talking about assets that are pretty much going to be able to quickly convert to cash. Now, maybe you don't have your own assets. Maybe you have a family member, you're lucky, a family member willing or able to give you money toward your purchase. Maybe your parents or whomever it might be. That's going to help you with your down payment and your closing costs. Well, that's fine as well. Just make sure you convey that information to the lender that you selected as you're going through this pre-approval process. So the lender is your employment, your income, your credit, and your assets at this point. What they're going to do is they're going to pull your credit, as I mentioned, if you're ready to move to that part of it, and they're going to ask you to provide documentation to support these items, right? So they're going to ask for things like your W-2s for the last 2 years, your pay stubs covering the last 30 days, your bank statements covering the last 2 months. If you're self-employed, you'll have to provide your tax returns for the last 2 years, right? These are just general documents that are going to be needed. Your driver's license, potentially your social security card to verify that you are who you say you are, right? We as lenders need to make sure that the person we're talking to and the person applying for credit is actually the person applying for credit. Identity theft is a real thing, so keep that in mind. So we're going to take all of this information, we're going to take the documentation to support the information that you provided over the phone, and then we're going to enter it all into our loan operating software. All lenders use a different software, but it all does the same thing. From there, we're going to go ahead and run it through underwriting software that's used across the nation by all lenders. It's not like it's different from one to the next. It's called Desktop Underwriter, and it's called Loan Prospector. And this determines if we're going to Fannie Mae or Freddie Mac with your loan, right? That's really it, but it applies to all lenders. Now, that's run up front by lenders who do their job thoroughly, because even if you meet all of the requirements on paper for a mortgage, there are times that it still does not run through the underwriting software. And there are little nuances that can change that and make a huge difference, but that's something that you definitely want to keep in mind. You want to make sure you're working with a lender that's willing to do all the work up front for you to put you in a much stronger position once you eventually go out and start looking for homes. Because once you start that part of the process, the last thing you want to find out after you found a home and given a deposit for a home is that you don't qualify. So when you're talking to these lenders and you select the one that meets all your goals and you're comfortable with, ask them, do you review everything up front, or do you actually conduct an upfront underwrite? Because I want to know for sure that I am good to go. I want no level of uncertainty when it comes to my qualifying for a mortgage. That's what you should expect to go through when you're going through the loan approval process, especially the pre-approval process. So make sure you're working with a lender, as I said, that's willing to do that for you. They're your teammate, and you want to make sure that they do their job properly so that you have a level of confidence as you're out looking at properties. So if you found this information helpful, make sure to subscribe to my channel, Brand the Mortgage Man, and follow me for more videos just like this one. If you have questions about your own scenario, make sure to comment below. I do respond to 100% of the comments left on my videos, and I may even answer your question in my next one.